Joining me now is NYSE Senior Market Strategist Michael Ranking. Michael, welcome to the show.
Hi, thanks for having me.
So we have a lot going on in the markets. This was a super busy week. Let's start with the Fed. Interest rates cut by 25 basis points. Jerome Powell signaling that a second rate cut may not be coming this year. What are your takeaways from that?
Yeah, so, markets had widely expected a 25 basis point rate cut. We started to see expectations for the end of QT, or the balance sheet runoff, to come, and we got that as well. Now, markets had started to get really aggressive in pricing in further rate cuts, throughout the remainder of this year and into the end of the year. And when they, as they showed up at the door expecting a treat, they got a little bit of a trick, right? And so Chair Powell kind of came out in a very blunt way, saying that December was not a foregone conclusion, adding to that, it's far from it, so very, made it very strongly, worded, kind of warning to the market that, there is a very divided committee at this point, right? And if you've listened to kind of the recent speeches from kind of members of the committee, or looked at kind of the dot plot recently, you can see there's a wide range of views, right? And that wide range of views is kind of driven by a couple of different things, right? And at the center of that, it's the idea of where is the neutral rate. The range of that neutral rate across the committee, generally falls between 3 to 4%. So with this cut, you're kind of at the upper end of that. So Chairman Powell is kind of telling you, we should start to move a little bit slower from here potentially, right? And see how things evolve. And then with the kind of current government shutdown, right, it does kind of make things a little more foggy. He used that analogy again yesterday, makes it a little bit more foggy for the Federal Reserve to figure out what the next step is.
What are the pros and cons of rate cuts?
Yeah, so at this point, right, you've had rates that are kind of viewed as modestly restrictive. That's how kind of Chair Powell views them, and he's kind of signaling to you where he leans, that he leans to some further cutting, right? And moving forward from here, kind of rate cuts help to kind of spur demand, right? And it also kind of helps in those more cyclical areas of the market. So things like housing, right? Helping to kind of reduce, kind of mortgage, kind of costs, right? It also reduces the cost of interest for the government as well, right? So this kind of helps kind of drive demand. That's where it can really impact things.
All right, and trade has also been in focus. President Donald Trump met with Xi Jinping overnight in South Korea. What were your takeaways from their meeting?
Well, amazing meeting, 12 out of 10, as the president told us, right? So, you had here as well, there were pretty high expectations coming in, right? We had that kind of volatility shakeup on 10-10, when we saw the export controls, the rare earth export controls ramped up in China, and then the response by President Trump. We've since been kind of walking that back. And then, last night we got, some positive movement. We don't necessarily have anything definitive, right? But we do see kind of a reduction in those fentanyl tariffs. We see, kind of a one-year pushback, kind of the rare earth export controls for a year. Right, and we started to see China pick up and commit to more soybean and agriculture purchases, which is going to kind of help trade. Markets kind of once again have gotten kind of has started to price a lot of this in, and we're expecting to see kind of a final agreement in the next week or so.
All right, and earnings season is upon us yet again.
Yes.
And we've seen a lot of the Mag 7 companies reporting, Alphabet and Meta yesterday. And then we have a few notables after the bell. Can you talk more about that?
Yeah, so look, in general, right, earnings season has been pretty solid. And I think that's a big driver of what has, kind of helped keep a bid underneath this market, despite some of the uncertainty that's been, kind of in the marketplace. Financials came out of the gate very strong. We're now seeing we're moved, kind of into more, kind of the industrials and kind of the AI. As you mentioned last night, we had 3 of the mega cap tech companies. Google or Alphabet, is the upside standout currently. Kind of up over 5% in the pre-market, and you have both Meta and Microsoft are down this morning, right? Now, the big takeaway here is that CapEx for AI, kind of AI-driven CapEx spending is continuing to increase. Those 3 companies alone committed to about, or had about $80 billion of CapEx spending in the previous quarter. They're expecting and telling you that that's going to continue to ramp as we move into next year, right? I think one of the things that stood out in terms of the weakness in Meta relative to the other two is that those two businesses actually have their cloud businesses benefit from a lot of that spending that kind of everybody is doing. So they have that offset here that Meta doesn't have. Amazon also has that offset with their AWS. As we get a report from them this evening. Now you've also really started to see that this AI-driven spending is making its way into other areas of the market. So, if you look at Caterpillar yesterday, Caterpillar had great numbers, right? But you see that a lot of that was driven by the energy vertical, right? Data center building, kind of data center construction, right? So, you're seeing the impact of AI kind of broaden across, kind of across markets, but that factor within the marketplace in general is becoming more concentrated.
Any surprises this earnings season?
I mean, there's always some landmines, kind of here and there. I think, if you look at things, I think one of the things that's important right now, given the government shutdown, is listening to corporate management teams talk about the macro environment, right, as we're not getting kind of that real-time economic data, right? And in general, right, the commentary, it's cautious, but it's kind of remains pretty positive. If you look at things like consumer spending, you had earnings from Visa and MasterCard over the last 2 days, right? They continue to tell you that the consumer holds up well. We see kind of resilient consumer spending. Financials, we had a little bit of a rocky patch, with some concerns around credit, but that seems to be kind of pretty isolated, idiosyncratic, kind of risks within the credit markets, and you continue to see kind of very, very strong kind of trading and investment banking kind of within financials. The industrial numbers have been pretty solid in general as well, right? And so I think the biggest surprise is that we continue to see this, kind of resilience in corporate earnings, kind of a testament to, just how how flexible and that management teams are, right, in being able to deal with kind of such a dynamic, kind of environment.
All right, Michael Ranking, NYSE Senior Market Strategist, thank you for joining us.
Thanks for having me.